Hi, welcome to this episode of Millennial Pocket. Today we're going to be looking at the rise of Robinhood. Robinhood is an app-based stock brokerage that offers commission-free trading. The number of users of the platform grew steadily since 2014, from 500,000 up to 18 million in 2021. The app's revenue did also grow steadily since its official launch in 2015. The digital brokerage estimated its revenue for the second quarter of 2021 would be around $560 million, roughly double the level of a year earlier. Currently, the company dominates the interest and attention of Gen Z with 29% of the market share, followed closely by Charles Schwab at 13%, Fidelity and TD Ameritrade at 10%. But what is the business model behind Robinhood? We're going to dive deeper into Robinhood's origin, why it is successful, and how the company makes money. Sit back, relax, and let's take a look. Vladimir Tenev and Baiju Bhatt met at Stanford University in 2005 when they attended a physics research program. After college, they both worked in finance, building high-frequency trading platforms for financial institutions in New York City. In 2008, right in the middle of the financial crisis, Bhatt would see firsthand how the financial crisis was unfolding and the changes financial firms were quickly making. He observed how post-financial crisis, there was a rapid universal growth of algorithmic trading, and markets had been going electronic. They both noted that executing a trade cost brokerages pennies, but they typically charged fees of $5 to $10 per trade and required account minimums of $500 to $5,000. That's why Tenev and Bhatt decided that they wanted to democratize the financial system by creating an app where anyone could trade stocks for free. They rented a little house in San Francisco where they got together to build their project. The team then went to test their product in New York, where they realized that there was an opportunity to create a business because a lot of the hedge funds and banks were still using very antiquated technologies. It took the Robinhood team over 1 year from the time they got the idea, 2013, to the time they were able to announce the product, having to get approval from the SEC. While it took the team over a year to go over regulations, it would also take them just 1 year to reach a 1 million person waitlist. After being featured on Hacker News, they ended up getting 10,000 sign-ups that first day and over 50,000 the first week. By March 2015, when they had officially launched the app, the company had almost 1 million sign-ups on the waitlist. After 75 venture capital doors slammed in their face, the founders of the platform finally found a few venture capitalists who decided to invest $13 million in the company, which included Index, Google Ventures, and Mark Andreessen. As we mentioned earlier, before Robinhood, anyone who wanted to invest in stocks would be charged between $5 to $10 a trade. They also needed to invest a minimum of $500 to open an account. Those platforms were often cluttered with research, market indicators, and advanced metrics, which are useful for more advanced traders or those who trade in volume, but which Robinhood co-founders thought would act as an impediment or unnecessary for the demographic they pitched their platform to, millennials and market curious. Robinhood was the first stock trading platform that offered commission-free trades of stocks and exchange-traded funds. Back in the day, the platform was very innovative since users could easily buy and sell stocks without a financial broker or commissions, and no minimum balance was required. The company also introduced fractional shares, which allowed those interested in it to buy in smaller dollar amounts, giving users more flexibility, allowing them to diversify their portfolio and reduce risk. No doubt another key to its success was its easy-to-use interface. When the app is white, the market is open. When the app is black, the market is closed. When your portfolio or stock loses value, the lines in text are red. When it gains value, it's green. Robinhood built important information straight into the UI itself, rather than explicitly telling the user like most stock trading platforms. The platform also shows recommendations of what other people have bought. This traditional e-commerce idea provides a great way for newbies in stock trading, their target demographic, to expand their portfolio, which increases revenue for the company. Additionally, the economic crisis caused by the COVID-19 pandemic has only boosted Robinhood's success, as the lockdowns and the resulting market volatility have piqued the interest of many people, especially millennials, to start investing. In fact, the company saw a rise of 3 million users during only the first quarter of 2020. Robinhood's main stream of income comes from payment for order flow. That's a controversial practice in which brokerages direct third parties known as market makers to execute trades on their behalf. When an investor places an order to buy or sell stock via the Robinhood app, the platform passes that order on to a market maker such as Citadel Securities or 2 Sigma Securities, which actually executes the trade. Then the market maker pays Robinhood, typically fractions of a cent, for those orders. Finally, when the trade is executed by the market maker, it profits on the transaction by buying shares at slightly lower prices than the price at which those shares are sold. This process eliminates the need for Robinhood to handle the complexities of executing trades itself. It also benefits market makers by giving them access to vast volumes of trades. In 2020, 34% of the company's payment for order flow revenue came from market maker Citadel Securities, followed by Susquehanna International Group 18% and Wolverine Holdings 10%. Market makers generally have more information and processing power than retail traders and brokers, according to the SEC, and theoretically this makes them the ideal middlemen for high-volume transactions. In 2020, Robinhood made $682 million off trades, a 514% increase year on year. The company attracts the highest rate for equity trades at 17 cents per 100 shares, and if we look at the options trading rate, the disparity is even bigger compared to Robinhood's competitors. Robinhood's transaction-based revenue rose 339.6% to $420.4 million in Q1 of 2021, accounting for more than 80% of the company's revenue. Net interest revenue, the second largest source of revenue for Robinhood, encompasses the money Robinhood makes from securities lending and margin loans. Margin lending allows Robinhood customers to buy stocks using funds borrowed from Robinhood. Margin loans allow traders to seize opportunities and invest in instruments without necessarily having the cash on hand to do so. Net interest revenues rose 160.2% to $62.5 million in Q1 of 2021, comprising approximately 12% of Robinhood's total revenue. Robinhood's other source of revenue consists of membership fees for Robinhood Gold. Robinhood Gold is a paid subscription service that offers users premium features, including enhanced instant access to deposits, professional research, NASDAQ Level 2 market data, and access to margin investing for approved users. Robinhood Gold, which costs a fee of $5 per month, saw paid subscriptions surge from 300,000 in Q1 of 2020 to 1.4 million in Q1 of 2021. The subscription service accounts for approximately 7% of Robinhood's revenue. Finally, in October 2019, the company started offering commercial banking products by launching the cash management account and associated debit card with no fees or minimum balances. The card was released in partnership with MasterCard, giving cardholders access to fee-free withdrawals from more than 75,000 ATMs. All funds deposited to cash management accounts are guaranteed by the Federal Deposit Insurance Corporation, known as FDIC, and account holders earn 0.30% annual percentage yield on the cash available in their Robinhood brokerage accounts. Robinhood isn't responsible for the interest payments offered to cash management cardholders. Instead, the company moves cardholders' funds into a network of FDIC-insured partner banks, which pay the interest on those deposits. The partner banks pay fees to Robinhood, and the company also takes a small cut of the interchange fees collected on the transactions made with its cash management debit cards. The feature was made available to all Robinhood users in 2020, with 3.4 million customers signing up for the cash management and debit card offers as of July 2021. What do you think about Robinhood? Do you use its service? Would you invest in the company? Please let me know in the comments section below. Leave a like if you got some value from this video and subscribe to the channel if you want to see more videos like this. Feel free to follow us on Instagram. We post every day there. I hope you really enjoyed this video. Thanks for watching, guys. Until next time.